Anand Shah is head of PMS and AIF investments at ICICI Pru AMC. Anand, good to have you with us here. Pleasure speaking to you after a while. Anand, how are things looking? All okay on the small cap, mid cap front? I looked at valuations for the mid cap index 1 year forward. This was about a week ago. We are trading at about 23 times 1 year forward earnings. The last time we peaked, which was in 2021, that number was about 35 times. So relative to its own history, valuations are not very high. But many are pointing to the convergence of valuation between large caps and mid caps and small caps and how that perhaps is a bit of a problem. Historically, it does not last. So just wanted your thoughts there.
Indeed, very good morning. Pleasure to be on CNBC. I think you're right, damn right, that, while the values are at new high, the valuations are not. And before I jump into mid cap and small cap, when we talk broadly about the markets, yes, since October 21, when the market peaked last and now, obviously the PE multiples have come off, which tells that, there's something underlying in terms of earnings growth, which is pushing the market up. And it's not so much of a sentiment driven rally as generally one would want to worry about. So I think that to that extent, yes, the positive is that it's backed by earnings. Further, if I were to go one step forward, the breadth, even in your opening remarks, we are not talking about only consumption now. We're talking about manufacturing, we're talking about utilities, we're talking about capital goods. So I think the other good news in the markets today, notwithstanding that the valuations can be a challenge and the sharp rally can be a challenge, but I think it's more broad-based. So I think the earnings recovery is not in the specific consumption segment, but it's more broad-based across utilities, cap goods, manufacturing, and obvious consumption continues to grow.
A lot of consumption stocks actually have hit new highs this morning. So let's just take note of that. Kalyan Jewellers is at a fresh 52-week high as we speak, up almost about 2% today. And it's been a 90% rise for Kalyan Jewellers this year. Phenomenal move there. TVS Motor is at a fresh 52-week high as well. Berger Paints is at a fresh 52-week high. And of course, PVR Inox, we've spoken about that. So consumption definitely is the theme across sectors. Anand, hi, good morning. I was going through your PMS contra strategy and one of your top 15 holdings is L&T. And that stock has come out of a very long lull, right? A multi-year lull. It's been one of the big performers this year. Do you think this is the start of a multi-year upcycle in capital goods and manufacturing companies, not just L&T, but even in the broader markets?
Many of those businesses that we have in those portfolios have actually had a very difficult decade. And this is something we have spoken before, that the markets are very different pre-2020 and post-2020. When we used to discuss markets pre-2020, there used to be those Rithik stocks, there used to be only specific segments of the market which used to do well, while a very large part of the economy, large part of the market used to struggle in terms of leverage, in terms of profitability. What has changed in the last 3 years is a lot of these stressed sectors have deleveraged significantly. The earnings have improved. The China plus one, to some extent Europe plus one is playing out, where the manufacturing entities in the country which has survived are getting new markets, new demand, and to that extent utilization is going up, profitability is improving, and that combination of utilization going up and leverage coming off, and banks have also now speak and span in terms of quality. I think we are talking of a new capex cycle. Again, we've been waiting for it. It's been many of false starts before, but I think we are very close to having the private sector capex cycle at last kicking off, given the utilization is higher, profitability is higher, and leverage is fairly low. So yeah, that's a good news for cap goods in general, L&T in particular. Yeah, it works out from a medium to long-term perspective. Again, I think investors need to be cautious at this point of time because there has been very sharp rally. Nigel also asked about, Prashant asked about mid-cap and small-cap, where we have again seen very sharp rally. So I think one needs to be careful. From here on, I would want to believe it is a marathon and not a sprint. I think we had a very, very fabulous last 3 years where a lot of money was made in a very short period of time. But one has to be very careful at these valuations one needs to understand it's a marathon from here and not a sprint.
Hi, Anand. Good morning. Anand, I wanted to ask you about a couple of spaces where you have some exposure and you've got it, bang on. The defense space, some of these themes out there. HAL, that theme has played out very, very well. But at current reckoning, what's your view on the stocks? Have they ran a little bit ahead of themselves in the near term?
Indeed, I think we've been struggling now to continue to justify to own more of them. There has been a significant re-rating that has happened in defense companies in general. No doubt, the news flows continue to be strong, not only from India's own defense spending, which is growing. On top of it, we are doing more indigenization. So, Atmanirbhar is making sure that the defense companies in India can grow faster than the budgets at which our defense budget is going up. And the most recently, I think we are seeing in some of the companies, we are getting exports orders from friendly countries. So I think it's in for a long haul. But again, as I was just saying, that yes, many of these businesses are discounting a lot of good news. And unfortunately, either you have a good news or a good price. So if you have a lot of good news, then one needs to be very careful that you might not have a good price. Typically, the best time to invest when there is a lot of pessimism, which is not the case.
Okay, the best time to invest is when there's a lot of pessimism. Got that. You have a lot of exposure to the financial space, of course, names like ICICI Bank, HDFC Bank, etc. But even some of these home finance companies, whether it's Repco Home, you have Muthoot Finance on your list as well. There's Bank of Baroda from the PSU space. I'm talking about your Contra fund again. This is a space that has had diverse reactions. I mean, HDFC Bank has been a big underperformer of late. What do you do at a time like this?
Indeed, again, financials will remain the most leveraged sector in the country, and to that extent, they will have higher beta both when the economy is doing very well on the way up, but also when the economy is doing badly. We've seen it between 2013 to 2020 when we had a series of challenges in the domestic economy, particularly manufacturing and infra sector, which led to NPAs coming through, and banks had to make significant provision. I think from here, and especially last 3 years and maybe a couple of years ahead, we believe the credit quality continues to remain benign. A lot of cleanup has happened. A lot of stress testing has happened. You can imagine there was a demon, there was a GST, there was the NBFC crisis. Then obviously the slowdown in 2019 and the 2020-2021 where the COVID wave 1 and COVID wave 2. So I think the banks have stress tested. Their asset quality today looks fairly strong, and that would continue to support the earnings growth rate, while NIMs can the net interest margins can come off a bit from a very high levels that we have seen in FY23. I think we remain optimistic that they being the most leveraged to the economy, and since our outlook on economy remains constructive, we believe banks can continue to do that.
Banks can continue to do well. Anand, actually look at PG Electroplast, if you can put that stock up. It's up another 8%, 2,100. It's like a rocket ship. 40% this month so far. From this space, Anand, what is the best bet, sort of putting valuation considerations also on the table? Or you think it's all kind of run up and you just throw up your hands and say, well, I missed it, and wait for meaningful dips? Or you think these are still buyable?
No, I think this is a subsegment of manufacturing. While we remain constructive on overall manufacturing doing well, India, apart from growing exports, will also have to do a lot of import substitution, particularly in electronic space, in white goods. We still import a lot of stuff. We have few companies in our small cap portfolios which are into electronics manufacturing, and we had quite a few IPOs more recently also, which have had a good response from the market. So I think it's an emerging sector, and to that extent, the growth is good. We don't have to even expect the domestic consumption growth for that, given there is a lot of import substitution opportunity. So even at the same consumption levels, in some of these segments, we can have growth because of import substitution. So yes, the growth is good. You're bang on when you're saying that the stocks have run up too sharply recently. The valuations are demanding. And to that extent, I come back to my first point being, if you want to incrementally invest in markets in general, some of the stocks in specific, you have to be in for a long haul. The short term can be difficult.
All right, we'll leave it at that, Anand. Appreciate your thoughts here. PG.